There was an expectation that the finance minister would make announcement related to tax on crypto assets and other virtual digital assets in the budget 2022. And yet, when she did, it took the entire industry by surprise. So what do the announcements on crypto mean for investors? On the face of it, the announcements were rather simple. That there would be a central bank digital currency to be launched by the Reserve Bank of India next financial year, and that trading in cryptocurrency would attract a 30% tax on profits earned and a 1% tax deducted at source. However, these matters are somewhat complicated by the fact that the crypto sector is still unregulated. Here, crypto is being used as a synonym of all virtual digital assets. In fact, this is the first time that the tax department is taxing an asset which is yet unregulated. We spoke to a number of key policymakers, including Sitharaman herself, Revenue Secretary Tarun Bajaj, Economic Affairs Secretary Ajay Seth, and the Central Board of Direct Taxes Chief JP Mohapatra. A few things stood out. All of the policymakers, including the FM, said that the taxing the crypto did not necessarily give them legitimacy. This did cause visible confusion and outrage on social media. But what is true that the tax department does not bother itself so much with legality of a transaction as with its taxability. The matter of legality of a transaction is the responsibility of other government agencies like the CBI, the Enforcement Directorate, the Directorate of Revenue Intelligence, the police, etc. The tax department has been studying the crypto market since 2017. According to its estimates, of the 40 crypto exchanges in India, 10 are significantly big, with turnovers averaging around Rs 30,000 crore a year. By conservative industry estimates, India has some 20 million investors in the sector, and the value of their investment could be in the range of about 15,000 crore. In simple terms, since RBI is coming up with its own digital currency, private cryptos will not be allowed as a currency. Cryptos at present are neither legal nor illegal as a tradable asset. That legality will come from the long-awaited cryptocurrency bill, which is yet to be tabled in Parliament. While the draft bill in its earlier avatar recommended a complete ban on even trading of such assets, the current view is that it can be allowed as a heavily regulated and taxed activity. Incidentally, tax on lottery winnings is also at 30%. The bill is delayed because the government believes that regulating this emerging sector cannot be done by one country alone and will require a multinational effort. Crypto regulations will be discussed at the G20 meeting of finance ministers and central bank governors later this month, with Sitharaman and RBI Governor Shaktikanta Das are expected to attend. The regulations will also be discussed at the World Bank IMF spring meeting in April. It is only after discussions at these international forums will India firm up its own cryptocurrency laws, and the bill could be tabled in the upcoming monsoon session of Parliament.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.